What's going on? Welcome back to the channel. Today we're going to talk to you about SoFi. I want to go over some of the current data points, break it down what moved in, go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So SoFi did close 1.9% in the green. So pretty good day all in all for the broader market, considering we also did have a little bit lower retail sales. Came in at 0.2, forecast was 0.5. But the market took this as a inverse type of scenario, as even though this is negative, it kind of does justify future rate cuts. So you did see the likelihood for the June 18th meeting slightly go higher. Not the March 19th or the May 7th, but rather just the June 18th. So the market's starting to look a little bit more, I guess, optimistic for that time frame, a little bit sooner than what was previously announced within like Q3, for instance. So I think generally speaking, that's kind of a good thing. You did have a little bit of a broader market pullback based on that. And I think that's just honestly last minute jitters associated to the keynote speech that is going to be kicking off tomorrow's NVIDIA GTC 2025. So Jensen, maybe the market's somewhat cautious about that because obviously in the past he's kind of mentioned just about quantum, and that has caused a immediate 25% pullback in that sector. So anything's possible. So we'll just have to wait and see how that does play out. I don't see it directly affecting SoFi all that much, but then again, SoFi is somewhat easily manipulated. So we'll just have to wait and see how that does play out. But SoFi did put out news today, and it was this. So Wyndham Rewards debit signals new loyalty frontier for brands. So this is just more of a kind of collaboration partnership with Galileo, and this is just to kind of piggyback off of the news that came out on February the 20th about Galileo financial technologies enabling brands to offer co-brand debit reward cards. So not really new information, nor is it a reason to go out and buy SoFi, nor is it a reason to sell. It's just more of a good FYI, good for Galileo and I guess through that SoFi. But I think one very good takeaway is, for those of you that follow Anthony on social media, he's become a little bit more engaging. And this has been one thing I've complained about. Like, Anthony has been very focused on like horses, lacrosse, golf, anything other than SoFi. But if you do kind of look at his recent timeline, he's been doing a lot more SoFi dedicated posts. So I think this is kind of what he's doing the right moves. Even though the news itself isn't all that crazy, but still the fact that he's actually putting it out is a pretty good thing if you ask me. But aside from that, shorts did take advantage of kind of the green day, and they did return 533,000 shares. 12.17% of the free float is being shorted, works out to be 131.14 million shares overall are being shorted. And today was rather interesting because in the past, whenever we've had somewhat mixed negative-ish data such as retail sales, shorts always double down. So I think in reality they do get the sense that the market truly does want to move higher, and honestly I tend to agree. So that's kind of a good thing, the fact that shorts did return. Cost to borrow minimum is back at being positive again. Through here there is a lot of shares available to be shorted, so in excess of 10 million, and for the most part you can kind of see that just that they were slowly increasing. At its peak they were increasing 2.3 million shares, and then it just dropped like a rock. So essentially kind of a good thing for that. Aside from that, moving over to options, actually my apologies, there's one thing I do want to bring up just vaguely, and there was a couple 144s that was submitted after hours. I'm not going to bring them up exactly because they're all like sells and they're for tax purposes. So whenever it's for tax purposes, it kind of gets a pass, at least to me. Obviously some people might care about it, but it's for taxes. Like, it's not anything crazy. But for options, 9.54 million in calls, 5.98 in puts. 49% of all the options being done today were optimistic in nature. And as you can kind of see based on the total dollar value, 15.5 in total premiums, 15.4 the day prior. So it's kind of in line as far as that goes. Put/call ratio is looking pretty good. So yeah, honestly, there's no real red flags when it comes down to this. Of the call options that were purchased today, you see a consensus for it to be roughly around that 13.50 to 14. So as I mentioned in my video yesterday, I feel like the market will really push SoFi back into the set range of 13 to 17, and then most likely it'll just kind of trade within that range for at least the foreseeable future until the market gets a very good catalyst to kind of move to the next leg up. But as far as bears, they were, and kind of option wise, they were anticipating for it to be sub 11 for this week. So kind of interesting. I'm not really sure what would really prompt a pullback. I think it would just have to be Powell for the most part, and that is Wednesday after in the afternoon. So yeah, I don't really see him really giving any major red flags. He might just burst the bubble essentially for any June or July Fed cuts. He might just hit that home, say, hey, you know what, it might be in the second half or late second half of 2025. I'm not really sure, but again, that's kind of what bears are doing. These are all the transactions that did occur on the secondary market above $100,000. So kind of low for this. You had some pockets of selling. Algo was really active today, really pushing SoFi higher. These are all the transactions that did occur on the dark pool. So a couple big ones, 1.7 million, but still I think big money is just waiting for the next big catalyst to really like jump full into SoFi, because when it was running up in like November, December, this was like massively riddled with like multi-million-dollar transactions, and I even brought it up at the time, and I'm like, well, this is insane. I'm bypassing like $5 million transactions because that's just the norm for SoFi now. So I think that has tamed down quite a lot. It'd be really cool if we somehow get that FOMO in the broader market again, really pushing SoFi to that $20 range or even potentially higher. I think some estimates are that it might be occurring in the second half of 2025, maybe coinciding with an interest rate cut. I'm not really sure, but let me know your general thoughts. Do you think that SoFi is going to be in the $20 range this year, or do you think it's going to be kind of just between that 13, 17, or potentially even lower? But with it closing at 12.32, it did close between this S2 and this S3. So today, even though low end of 11.96, high end at 12.47, didn't touch either the S2 or the S3. So kind of just take note of that going into the next couple trading days. No real crazy pieces of news either, just a lot of institutions increasing as per usual. So this one looks like a lot of insiders that they're bringing up. So a lot of the recent transactions. So you did have some, so Form 4s that was done on March the 12th. You have some 144s that was done today. Nothing really crazy as far as new news from an article standpoint. No new analyst ratings on either, but as far as on the actual chart itself, so $11.76 is that ALMA. So today it was able to successfully get above that. Next real kind of big target is going to be that 100-day moving average, and that is sitting at $14.45. So SoFi does have a pretty big gap that it can really fill. I feel like this pullback that did happen right here in the end of February was very unjust, and it was, I don't know, the market's I think slowly correcting back to that stage. So yeah, it'd be good if SoFi was to get there, but I think just there's a lot of FUD that is floating around, a lot of analysts that are focusing on the wrong things rather than just, I don't know. On a side note, I'm going to go on a little bit of a tangent. So I get consumers are struggling and have been struggling for the last little bit. And I've often enough gotten a lot of messages. Hey, do you think we're going to be heading into a recession? Consumers are bad, blah, blah, blah. Yes, consumers are bad and have been bad for a very long time. What happened during COVID, we did find out that consumers are like, they adapted. And I think no different than the current environment, consumers are adapting. And one thing that, even though, like, let's say unemployment is going higher and a lot of the labor data hasn't always been the greatest, but with all these AI plays and tech plays, they're essentially increasing efficiency. So I think over the next decade, the market is going to be kind of less focusing on labor versus productivity. And that's just my viewpoint, of course, because I think almost any company out there, even SoFi is a very good example, that you don't need all the same level of staff that brick and mortar has. but SoFi has better growth. So essentially, like, it's kind of wrong to gauge unemployment as like what is happening in the actual broader economy. That's just my 2 cents, side note type of random thing. But nonetheless, let me know your general thoughts on that. Do you think that we are heading into like a recession because of consumers? Do you think that everything is okay? Do you kind of agree a little bit with my viewpoint on that? So what's your kind of 2 cents? One final thing, pop over to my Patreon and get buy signals on stocks, options, and crypto. Many of them have been absolutely on point and bangers. Definitely worthwhile to pop over there and take a look. With all that said, appreciate all of you watching.